That's what they say when we're together. And watch how you play. They don't understand. And so we're running just as fast as we can, holding on to one another's hand, trying to get away into the night. And then you put your arms around me and we tumble to the ground. And then you say, I think we're alone now. There doesn't seem to be anyone around. I think we're alone now. The beating of our hearts is the only sound. Look at the way we gotta hide what we're doing. 'Cause what would they say if they ever knew? And so we're running just as fast as we can,
Welcome, welcome, welcome. We are back. I don't know if the audio is messed up right now. I'm not using my normal microphone, so let me just check. Let me. Sounds okay to me, but I can't hear the music. So if anybody wants me to change the song, just let me know. But today was very entertaining. That's to say the least. Today was my worst day actually, in quite some time. And you looked at the stock market in the morning. We gapped down and we saw like a 1.5% rally to the upside. And unfortunately, I was in puts during that rally. So rough day for me. It's part of the game. Still up on the month, and just kind of regaining from that. But a lot is going on. We got to start off with Bitcoin, of course, which it's been in this range since March. And there's just something about March of this year. If you've been watching my streams, I keep talking about March. That's when the TLT started inversing the SPY. That was a major low for the SPY. The VIX also had some stuff there. It didn't even seem like it at the time, but March was really a very important technical area for the market this year. And Bitcoin's been in this range since March, and as of today, it just broke out of it. It confirmed the daily candle close, breaking out of the range, very good volume as well. So you ended up breaking the range and going right up to that 35K level. And I've had that charted for a little bit of time now, and you pretty much like perfectly tapped it. And now you're just kind of sitting in between that 35K resistance level and the range that you just broke out of. So very, very big move for Bitcoin today. If we go to a weekly time frame, actually, a while ago I was talking about this bullish shark on the weekly. And yes, it's taken pretty much a year for it to start to really show itself playing out. But as you can see right now, this is really doing well. I mean, just since it hit the pattern completion zone of that, Bitcoin has doubled. Like, it doesn't even really seem like it, but Bitcoin has already doubled off the lows. And I know it's still much lower than its highs, but very interesting. So it does look pretty good on the weekly, in my opinion. Just got a nice candle breakout. You've got hidden bullish divergence that just confirmed the volume. It's the highest volume since like the summer. I think as long as you can continue to hold above 28K on the weekly, it looks pretty good to me here. Ethereum has been lagging a little bit, but it finally just got up to test its 200-day moving average. If anything, this is kind of starting to develop a little bit of a wedge or a downsloping channel. So it is going to be playing catch up to Bitcoin for probably quite some time. But this is kind of your pattern on it. Really hasn't broken out yet. Well, Bitcoin is at its highest prices of the year currently. Ethereum is not even close to its highest prices of its highs of this year. Is another 20% higher for Ethereum. So really not doing the same thing there. If we move over to bonds now, the US 10-year pretty much put in a tweezer top, all right? It's that green body followed by a very similar red body candle at the top of a trend. You got the fall through candle today. The last time we did see a bearish candlestick pattern on the daily was over here, and that did lead to about a 5% decline. So I think this should also at least maybe lead to something around there. And this is happening right at that 5% resistance level. So we've got classic bearish divergence on both oscillators on the daily. And this could certainly be an area where this continues to pull back. Go to like shorter term treasuries, the US 2-year, breaking back under the 5.11 resistance. See these highs from March. Again, that was just such a key point for many different reasons. Across multiple markets, July and August, you're back below those. So starting to see those start to fade a little bit as the market's coming in. Move over to the VIX now. You get a pretty large bearish engulfing candle today. You have classic bearish divergence. Simply looking at bonds and the VIX, these are kind of bullish signals for the stock market. One other thing I want to look at is TLT, 20+ year treasury ETF. This looks very interesting to me. You've got classic bullish divergence on both oscillators with very high volume on the daily. I think maybe the highest volume ever if we go to the weekly. Yeah, the highest volume ever currently on the weekly. And you're also testing your lows from 2006 and 2007, just before the Great Recession. You've also got classic bullish divergence on your RSI on the weekly. it's still a falling knife, but these are a lot of technical variables that are starting to show up, in which kind of give a decent chance of more of a reversal off of this. You've got multiple gaps to fill above, like for a while. There's not a lot of resistance until 100. I think the main one on the TLT is probably going to be around these lows at 92. But apart from that, there's not a lot of resistance. It's looking pretty oversold. Definitely something noteworthy. If we want to look at some other bonds right now, the 1 to 3 year Treasury bond ETF just broke out of this supply line and back tested it. This is the 2-year note Treasury ETF. This also is looking like a wedge. So we're starting to see the US 2-year, the US 10-year, the literal spot treasuries pulling back. But if you start taking a look at some of these ETFs, they look kind of bullish. I mean, look at that volume today on YouTube. That's insane volume. It was just kind of a flat day, but it is somewhat breaking out of this wedge. If we take a look at corporate bonds, now that breakdown did play out, but what is it doing at this point? Starting to develop maybe a little bit of a wedge here. And then you're also getting classic bullish divergence on both oscillators on the daily time frame. So we're starting to see this flip. Seeing this flip around is quite interesting. And if we move into oil and some commodities now, oil just kind of looking flat. Gold also kind of looking flat short term. Hang index is pretty much testing its lows of the year as we speak. And then finally, dollar currency index. I talked about it. You had the classic bearish divergence, broke under the trend line, you flip the trend line into resistance, and now you're also testing the breakdown of this 105 level, which was highs from March. So if that breaks maybe back down to 104.5, somewhere around over here. It's also pretty interesting that this is one of the worst days for the dollar currency, or the US dollar index. And on this day is one of the best days for Bitcoin of the year. That's just something I want. Oh, pretty interesting inverse relationship over there. And let's talk about the market. Okay. I am still bearish on the market. I kind of lost my patience this morning and went a little bit too heavy on puts. I got Nvidia puts, and Nvidia had a pretty good day. It was up 4%. I had SPY puts. Those did not do well either. So all in all, we did actually close down, but what we did see in the morning was a gap down and then a pretty aggressive rally. And I was looking at that as a dead cat bounce. I tweeted out a cat bouncing, and then I also said in the Discord that I didn't think that the rally was going to last. And we did give up a decent amount of it later on in the day. But off the lows, we saw this bounce. It was almost a 2% intraday rally, which is, it's pretty aggressive, but it's not even that much of a surprise. If you were in the weekly call last night in premium, I was talking about the fact that this could be an area where we at least just get a bounce before going lower, because we were matching these lows from the beginning of the month. And I did not even fully listen to myself, because I saw a gap below those lows. And I'm like, okay, we just gap down under the 200-day moving average and our lows of the month. I genuinely thought early in the morning that it was going to turn into a pretty ugly day. And we ended up doing the opposite. That bearish trade might have just been too crowded today. And I was a part of it. I'll admit it. So we did start rolling over later in the day. And we ended up having our lowest candle close on the daily since May 31st. And you closed your second day under the 200-day moving average for the first time in a long time. You also closed above these October lows. So it still looks like a technical breakdown to me. You also just confirmed triple hidden bearish divergence on the daily. The only thing you're doing right now, and the level that you did bounce off today, which I should have done a better job of paying attention to, is this high from, let's see, from February 2nd of this year. That's why I have this zone. And if you go back to all my streams in the last 3 weeks, I've had this zone charted out. We actually bounced off kind of a mix of this zone and then also the demand line of this downsloping channel. And the Qs did a very similar thing. The Qs went down to the demand line and they also got a bounce. So we did see some support levels that I should have taken more caution around. Act as support today, you got to bounce off of it. But we still did not make any higher closes of any significance. We're still making lower highs. The theme on a lot of these different charts, especially in large caps, does not look so good. And this just kind of looks like the McDonald's pattern right over It's like this M shape right there. So if we zoom out, technically, yes, that is a bull flag and a bullish trend. But this is now the third time you're testing a breakdown of this yellow zone over here on the Qs since June. If you couldn't really get a substantial move off of that after 3 times, it's possible on the 4th, but I see it less likely. So I still do believe that the markets are heading lower. I do have to be more patient around that. Today was me being not patient around it, but to me, this still looks pretty not so good. If we look at the Russell 2000, that actually played out a little bit better, where it closed down almost 1%, and it's now getting close to its pretty much its lowest point since the COVID crash recovery, which is going to be 163. But that zone breakdown did play out. I was genuinely looking for something like this to happen on the SPY today as well. It just didn't. And that's just kind of the moral of the story. The ARK ETF was kind of flat today. It perfectly touched that $35 support level I was talking about on stream last Thursday maybe. So you perfectly tapped that. You could see there's a couple of lows there. So, this could turn into a harmonic at some point. It could even turn into a bullish butterfly, but that would take you down to about $30, pretty much matching your lowest prices since 2017. But if you do get back down to this low from last December, you would have a bullish butterfly out of support on the ARK ETF. That would be a much more interesting area to start longing some of these mid-cap growth stocks than where we're at right now, even though, yes, this is a very important historical support zone. So that's pretty much what's going on. Let's talk about some individual names now. Got to start off with NVIDIA. It's kind of back testing the breakdown of this ascending broadening wedge. It has hidden bearish divergence. We go over to the 4-hour chart. It's got this head and shoulders set up. And I did go ahead and get into puts on, this is going to be one of the weirdest things I've said in a long time, but I did get into puts on NVIDIA at a pretty rough area. It was very close to like literally the low of the day. So this was one of my worst trades so far in a long time. I genuinely thought that we were breaking down because of how the market was looking with the gap down at the open, and ended up just finding a rally and holding it. I still, however, do think that 410 support level breaks. Will it happen this week? I don't know. But in general, you've put in 3 very well highs. I'm trying to find the right word to use here. They're very clear. It's a very obvious head and shoulders, which I know kind of makes patterns weird sometimes when they're so clear. But just if we zoom out over here, this really has not seen any significant pullback since pretty much exactly a year ago. It's up about 291%, and you have, I think, room to fall. So I'm still bearish on it, but I did royally mess up the timing on entering puts today. I just want to talk about that chart. I think as long as it stays under 480-ish, which is this right shoulder high, it still has the potential for that head and shoulders, and it's still bearish to me. I'm just talking about it as a trade. Long term, this has performed amazing. I'm sure it's going to continue to perform amazing long term. Well, I'm not sure, but I hope. And I would not be surprised if this gets to new all-time highs within the next year. But I do think it is due for a pullback. So that's NVIDIA. Let's talk about some of these crypto stocks, which, wow. Let's take a look at how these did after hours with what Bitcoin's doing. So Mara closed another 9% after hours. It went up to $9.50. So it's actually sitting pretty much right there after hours, where I just put that white line. So that's a very interesting level, right? Because what you're doing at that level is you're testing the zone. And if it doesn't move around too much in the pre-market, which is unlikely, and let's say it does open here at 950-ish, which means it would open up 9% pretty much green at the open, then you are testing a key level. It's your lows from last October. It's a huge consolidation range from this May, and it's also pretty close to this high from October 2nd and the 200-day moving average. So breaking above that would be huge in my opinion, stock. That really is what could set up like a larger inverse head and shoulders pattern that you might be seeing on a weekly time frame with hidden bullish divergence if it can clear that 950 level with confirmation. Probably depends on Bitcoin, but Bitcoin is doing its job for right now, and that's like the least you can say. And then its cousin, brother, dog's neighbor, Riot, closed after hours up 9% as well. It's currently sitting at 1050. Let's put a line over there, 1054 to be exact, which is also literally testing its breakout. 1016 is a big level on Riot. You can see this high over here, these lows, the 200-day moving average, and it clears all of that. If it can open and confirm above 1054 tomorrow, it potentially gives you room, maybe not in the same day, but room up to 1258, which is your next resistance. So these charts are looking very interesting. Of course, with Bitcoin, I forgot to chart out the next level for Mara. So we will see how they open tomorrow. They are up 9% after hours. I don't know about FOMOing into it, but if it does give a healthy pullback, I'm definitely keeping a very close eye on both Mara and Rye with what is going on. All right, and let's look at some other big names. Apple went down to the 200-day moving average. On my last stream, I did say that was probably the next move with the high likelihood. Went down and touched it today, tested it, whatever you want to say, and it did get a small bounce off of it, but you're still under the critical resistance zone. So we will see. It's kind of 50-50 here. You might have a flag developing here, but you're under critical resistance. Netflix, kind of just 3 inside days in a row since gapping up after earnings. Just maybe see which way that little 3-day range breaks. Tesla closed flat. It's just testing this historical zone. Very important zone. It's testing it. Whichever way it breaks out of this zone is probably going to direct you to the next move. Let's look at Fisker. It's sitting at the bottom of this range. This is a very critical support area for Fisker. They did cut the prices, I think, on a couple of their higher versions of the Ocean Extreme Trim, to about 61.5K from 69K. That's $7,500 off. Reservation holders who have already agreed to pay the higher price will get a $7,500 credit. Love to see that. Also rewarding the people that already bought them. So didn't really see any much of any movement. I do remember earlier in the year when Tesla cut Model Y prices. I think it became like the most sold car at the time, and it really helped out Tesla stock. I don't know if Fisker is doing enough quantity to get those type of numbers. Maybe it never will. I hope it does one day, but that is something to note, and you didn't really see much of a move off of that, but nonetheless, very key level of support for Fisker. Keep a close eye on it. If not, then the next 2 levels are those lows. DraftKings got to bounce back today, up 4%, bullish engulfing candle, but the larger picture is that this broke down from its trend line. So I'm just looking through a bunch of names on my watch list right now. Microsoft's pretty 50-50 here to me. Earnings are later this week for Microsoft. Google also has earnings coming up in this week. These are the 2 major levels I charted out in our weekly call last night to keep an eye out for Google. And then same thing for Amazon. These are the key levels heading into earnings. Really nothing to look at apart from levels when it comes to earnings. So this is a very, very key point in the market right now. I think crypto looks pretty decent. It's pretty good, just broke out. I think the TLT could get a bounce here with a lot of oversold conditions. And I think that the SPY is going to see lower prices. That's my quick summary of everything I just talked about tonight. I could potentially be wrong about all 3 of those things. Bitcoin could crash, the market could rally, and then TLT could drop to 0. Anything is possible, but those are the 3 things I think, and we will see how that plays out over the next few weeks. Hopefully that was a good update. I need to relax now and come back tomorrow and start chopping away at making back that loss from today. So I'm going to do that. Thank you all for watching the streams. Hit the like button, hit the subscribe button. I just really wanted to get a lot of these important points across tonight. Just a quick update stream. I'm not going to be live tomorrow night, but I should be live Wednesday and Thursday night. So I'll see you on those streams. If you're not on the Discord, links in the description or at the bottom of your screen, discord.gg/freetradingmovement. I actually, yesterday, if you didn't see on Twitter, made a pumpkin with the FTM logo. So this image is way too large. You joke. Try like this. There we go. I made an FTM pumpkin, free trading movement pumpkin last night. Threw some candlesticks on it. I wrote calls over here and then puts over here. Attempted to make a ghost and then do the logo. So if you want to join the FTM for Halloween season, discord.gg/freetradingmovement. And if you want to join premium, wap.com/championvibe. That's the pin chat. Have a great night, everybody. Good luck trading in the markets tomorrow, and I will see you on the next stream.